whining all day and blaming others, drinking your cheap beer, stuffing your face, and typing like deranged monkeys.
Someone said nobody is gonna buy your bags, Raoul. That looks like a Motoko Ghost NFT.
Retail in most places don't have any money. We've gone through a horrific year of chop so far, really. You can't make money. It's a very frustrating market. And what about the other side of the promised land, which was the Web 2 to Web 3 conversion? That seems to have completely ground to a halt right now. I just don't see a lot of stuff.
JP Morgan using Chainlink. Our blockchain deposit accounts are highly interoperable with the rest of the bank. This is Elliot from the Early Stage Investor. The entire crypto market is hitting the fan. We have people turning against Raoul Pal. People are angry at Raoul Pal. Someone wrote, so how's Sui doing compared to Ethereum and Solana? Raoul Pal responded, you are not a serious person. Friend, you've been peddling guaranteed everything code to young people who turn to you for advice. You incorrectly forecasted a banana zone this year, which objectively was a bad call. If you're taking incoming, at least reflect and own it. Raoul Pal says, you are not a serious person. Raoul, extend your time horizon. Also, Raoul, the market gives 0 Fs about your time horizon. Either time horizon matters or it doesn't. Which is it? He says, you are not a serious person.
You see, whining all day and blaming others, drinking your cheap beer, stuffing your face with, I don't know, processed crap, hoping to numb the pain, and typing like deranged monkeys, looking at 5-minute charts, hoping for the next 100x. It's probably, I don't know, maybe not the answer.
Someone said, nobody is going to buy your bags, Raoul. That looks like a Motoko Ghost NFT profile picture. He says, you're not a serious person. How do you square Sui being your main bag when it's not even a top 20 asset? He said, you're not a serious person. Someone said, shill Luna one more time. Right word salad. Hold self accountable. Raoul Pal said, maybe check the actual truth. You're not a serious person. So it's peak bearishness right now. It could not get worse for people that are bullish crypto. Now, if you've been following this channel, I've been extremely bullish crypto assets. I just said survive until 2026 when Jerome Powell leaves the Federal Reserve. Because why is all this happening to begin with? We know exactly why it's all happening. Stocks notch worst day in over a month as tech sell-off intensifies. Why is that happening? The same reason crypto is falling. Markets no longer view the December rate cut as a sure bet, with Fed officials casting doubt. So Fed officials are casting doubt about whether or not they're going to continue cutting rates. That's causing the market to melt down. That's causing early stage assets that need liquidity to melt down. Now, as this video is being recorded, it's Tuesday, November 18 at midnight. This is the only reason your Chainlink and ICP is crashing. It goes back to interest rates, as we've talked about. And so in orange, what we can see is the poly market prediction of a Federal Reserve rate cut of 25 basis points in December. Look at that. Since the start of November, it just been crashing. That is the only reason your crypto has been horrendously terrible in November. Now, as I'm recording this, again, around 11:50 p.m. on Tuesday, November 18, we're starting to see the odds of a December rate cut tick up. Why is that happening? UK inflation cools to 3.6% in October, boosting chance of a Christmas rate cut. This is November 19, 2025 at 2 a.m. Eastern. And so we know exactly why crypto is falling, right? November's been horrendous. This orange line has been absolutely horrendous. Now we're potentially getting a reversal. That's very good news for early stage investors because this is all we're waiting on, right? Is a drop in interest rates, a potential Santa Claus rally. Here's the Bitcoin exchange liquidation map. What it shows is that in green, we see the wall of shorts that could potentially get squeezed and liquidated. These are leveraged shorts. In red, we see the leveraged longs, literally 0 leveraged longs left to squeeze, massive wall of shorts left to squeeze. So we could potentially get a massive Santa Claus rally just on the back of this epic short squeeze, a potential rate cut. But I'm just trying to explain to you why we've had such horrendous price action, why everyone is afraid. But literally, we could see a massive reversal at any time. And again, I think that could trigger a seriously bullish Santa Claus rally for ICP, for Chainlink. So regardless of how it plays out, at least you know exactly why these assets are acting the way they are and how there's potentially massive life-changing upside ahead. In black, we see the ISM. It has been flat for 3 or 4 straight years. Why have crypto holders been in pain for 3 or 4 straight years? Because the black line has not moved up. Bitcoin implied ISM pricing flat. When you look at the correlation between the ISM and Bitcoin and altcoins, they all do terribly together and they all do really well together. The only difference between the period we've been in and the other periods, 2021 we had a massive bull market, 2017 we had a massive bull market. The only difference is Interest rates. Again, that's why the market is so sensitive to interest rates. In 2021, the Fed took interest rates to zero. We had the ISM pump. We had crypto pump. Same thing in 2017. Now the odds are that they're not even going to finish cutting interest rates in December. Now, again, this is all going to change. They're going to have to cut interest rates because the market can't take this pain. Here's Darius Dale. He's a financial analyst who covers this. Here's his take on, he's on Fox Business all the time. Here's his take on what is happening.
Because the Powell Fed is unwilling to force the entire U.S. economy into recession to achieve its arbitrary 2% inflation target, it has opted for the politically destabilizing policy of only forcing low to medium income households, small businesses, and interest rate sensitive sectors at the bottom of the K-shaped U.S. economy into recession. Let me say that again. Because the Powell Fed is unwilling to force the entire U.S. economy into recession to achieve its arbitrary 2% inflation target, it has opted for the politically destabilizing policy of only forcing low to medium income households, small businesses, and interest rate sensitive sectors at the bottom of the K-shaped economy into recession, i.e. excluding the top part of the K.
I 100% agree with Darius Dale. What he's saying is we have a K-shaped economy, we have the haves and we have the have-nots. Right now, interest rate sensitive sectors like real estate, like early stage growth technology is the bottom of the K. It needs funding, it needs capital, it needs low rates. The top end of the K is big cap tech. It doesn't need low interest rates at all. It has plenty of cash, billions and billions of dollars on its balance sheet, just spending money like sand on AI. And that's the top of the K. Those are the haves when interest rates are high. And so what he is saying the Federal Reserve is doing is being incredibly political. It doesn't mind when the lower end of the K, small businesses, are suffering. So it's taking a politically destabilizing strategy of allowing the have-nots to fall into recession, but not the haves, right? Big cap tech, as long as they're fine, the Fed is happy. The Fed doesn't really care right now about the bottom section of the K, right? The interest rate sensitive sectors. So what he's saying is they're being very political. They're choosing which side does well. Currency is going to be debased no matter what, but in this type of environment, the haves are benefiting the most from the currency debasement. There's no opportunity at the bottom interest rate sensitive sectors of the economy. And so that's what the Federal Reserve is doing by saying no rate cut in December, right? They're just causing the crypto market, early stage technology, revolutionary asset classes that just aren't discovered yet, that are really sensitive to liquidity. They're causing those to go into recession. And so that is exactly what is happening to crypto. Now, again, I've been saying you just have to survive until 2026 when Jerome Powell leaves, because Trump is going to put in a Federal Reserve chair that forces interest rates down, that lets inflation run a little hotter, but allows opportunity for sectors on the lower end of the K, right? Interest rate sensitive sectors, real estate, digital real estate. And so here's Raoul Pal's take on what is happening in the economy. He interviewed Richard Galvin, who owns a hedge fund that invests in crypto assets. Here's their take on what is happening and what comes next for crypto.
We've had no real new liquidity in outside of the very top end. And that's a function of this has all been generally driven by retail. And retail in most places don't have any money because, prices went up a lot. Interest rates haven't come down much yet. The economy still, the actual economy, look at the ISM survey, still below 50, so it's not even expanding. And then you're like, well, obviously, they're not throwing money into crypto because they don't have any.
So that's one of the main reasons crypto is down. That's what he's saying, because retail traders are the only capital in crypto. There's no institutional capital yet. It's all retail traders. Retail traders have money when interest rates are down. It's the only time the economy does well. It's the only time retail investors have capital. Retail investors love crypto. They understand it. The younger generations fully understand it. The younger generations, when rates are high, don't have access to a lot of capital because interest rates are the oxygen of the financial system, and all of that's gone at the moment.
If you've got a smartphone, you can get $10 right now.
And the US has figured this out. I mean, like Scott Besson's gone, oh, this is how we dollarize the world, and we can fund like $3 trillion of short-term notes via stablecoins.
Yeah, and that Thai investor or that Cambodian consumer that's now got $15 US on their phone, that's $15 of pure incremental demand for treasuries, which doesn't exist, right? And sounds like small dollars, but if that's the bulk of the world's population. So if you start scaling those numbers across the world's population, it looks like a pretty good sponge for some of the sovereign selling we've seen in treasuries, right? Like it's kind of the counterpoint. It kind of surprises me that Besson's kind of seems to be the first guy that got this.
So that's the game the elite of the world are playing. It's stable coins, right? They want stable coins to balloon in adoption because that's going to make everyone who's ever wanted access to US dollars have access. They're going to start putting money into stable coins. The stable coin issuers are going to go buy US debt. That's going to lower interest rates. That's going to finance US deficits, right? If they're playing 4D chess, they're using crypto. It's all coming. When trillions of dollars of capital moves into crypto, that's a massive liquidity infusion. We've seen what happens to assets like ICP. On just a little bit of news, ICP skyrockets. Chainlink, WorldCoin, they skyrocket. So it's just a matter of time and letting the plan of the most powerful people on the planet, the US government, play out.
We've gone through a horrific year of chop so far, really. Yeah, Bitcoin's managed to eke its way higher. ETH had its rally from its lows, and it's now kind of in line with where it should be. But it's tough, right? Because unless you're a trader, you can't make money. You can't sit on anything because there's not enough liquidity. So the alts market bleeds, even if it's cheap. It's a very frustrating market, and we probably end up finishing much higher into year end. And you've waited all year, and all the returns come in 2 months. I mean, we're kind of used to this kind of ridiculousness of this market. A lot of people have got their heads conflated with like it's the end of the cycle, it all failed, crypto's dead. And I'm like, no, I think the cycle's been extended for a bunch of reasons and liquidity is this reason. And once you see it through a liquidity lens, it completely explains what we've been talking about and then why there's all this discounted stuff. So therefore, once liquidity flows, you're going to see a re-rating of the space in a way that people don't even believe is possible again. And what about the other side of the promised land, which was the Web 2 to Web 3 conversion? That seems to have completely ground to a halt right now. I just don't see a lot of stuff. Yes, there's a bit of sandboxing going on with encrypted messaging, on-chain messaging. There's a few things, but it's kind of none of that's happened yet.
Yeah, but isn't that what we're seeing with stable coins? I mean, the people like the Revoluts, people like...
Well, I think there's the whole bunch of financial applications and then the non-financial use of blockchain at scale for companies like Facebook and Google and digital ID being one of the kind of dominant cases, having creator economy tokens, all of that stuff that's supposed to be there, it just never gets traction. Again, it's probably because of the reason that you said, there's not enough long-term capital yet in that space. At liquid market level, at VC level there is, and many people have put money into that kind of space, but nothing on the liquid side yet.
I think we're probably in a weird spot where we're probably seeing the biggest divide in that, actually, that I've ever seen. Traditional markets, traditional investors, traditional investment banks, super excited about crypto, and the crypto native people are kind of in the doldrums and depressed. And I'd put stable coins as kind of flipping a lot of that sentiment. We've got huge conviction that the intersection of AI and crypto will be massive. Where that utility lies and who the winners are, I think we're still a long way from knowing. I think what crypto is waiting for, and I think a Clarity Act is we've seen Genius Act and Clarity Act on the horizon as well. What it's waiting for is that transition from, and the transition has to happen, right? Because the ownership of crypto is just so skewed retail versus institutional versus anything else you look. Is just those building blocks in place to allow that institutional ownership to kind of take over.
There's no institutional liquidity in these assets, and retail investors don't have the capital to pump these assets. But there's always a reckoning day when the world wakes up to revolutionary technology. This is how frustrating the Amazon chart was for years. We had the global financial crisis. It fell again. Everyone gave up hope. But that was the time to buy, right? Because from that point, people realized how revolutionary Amazon was, and it provided massive life-changing returns. So it's just a matter of waiting for that time. Patience is required. We have asymmetric upside for these assets. So now, as far as what comes next in the next few months, 2026, if you are watching this for Raoul Pal's take, here's what he thinks happens. Very soon. I think this week the Fed's hand will be forced to tweak the plumbing to avoid a month-end and year-end funding crisis. Crypto is currently trading like a stressed funding vehicle, reflecting the broken plumbing, while stocks are cushioned by buybacks and performance chasing for now. But risk repeat of 2018 and 2019 have not solved immediately. It's clear the Fed are concerned, hence the meeting with the banks and New York Fed to understand why the SRF isn't being tapped enough to resolve this. The fear for markets and the Fed is rising, so we're heading towards a nice little financial collapse. Weakness in the market. If the Federal Reserve's precious big tech falls, they're going to step in and pump liquidity. All I know is by 2026, we have A totally new Federal Reserve schedule. So all I've been saying is you just have to survive until 2026, but we're getting very oversold. So the question is, are these assets the high quality ones? Are ICP and Chainlink the higher quality assets that can absolutely skyrocket? Let's just dive into what's actually going on with these assets. First of all, for some context, Cathie Wood says Ethereum's high fees are driving activity to layer 2s, raising doubts about its long-term role as the main layer 1 settlement layer. Wow, right? Early stage investors have known for a long time the technology of these assets, right? It hasn't taken us this long to figure out that Ethereum can't scale. So we cover ICP because it's one of the fastest blockchains on the planet with the most revenue per user. Because why? Because it does more than other blockchains. It's not just a blockchain. It's an internet scale asset that has compute, that has data storage, all on chain. And so here's just one example of scaling activity. Odin Fund hits 10,000 Bitcoin in all-time volume. That's over $1 billion USD at current prices. Bitcoin DeFi is alive and growing on ICP. Just one use case, right? Wall Street's slowly starting to realize that Ethereum can't scale. They're going to discover some of these other assets that have thriving activity on it. That is why we cover ICP. What about Chainlink? Mind-blowing adoption of Chainlink. At the Federal Reserve's FinTech conference, JP Morgan highlighted Chainlink as a critical provider of cross-system and cross-chain interoperability. Literally, it does not get bigger than that. Here's the Chief Innovation Officer at Swift. We're entering the revenue era of DeFi where utility tokens aren't just utilities, they are assets. The next $1 trillion business in crypto won't be built on hype. He was just at Chainlink's SmartCon, pumping it up. Swift is massive. 11,000, 12,000 banks. That's what they represent. They're using Chainlink. JP Morgan using Chainlink. Our blockchain deposit accounts are highly interoperable with the rest of the bank, while also being extremely interoperable with public blockchains through our use of Chainlink and other mechanisms. That's the head of Platform Settlement Solutions, Connexus by JP Morgan. So are these assets similar to the Amazon? Can they provide life-changing returns? Absolutely. So at the end of the day, we have asymmetric upside, we have short-term volatility, we know why it's happening, we know there's a mega trend in crypto, and so it's just a matter of being patient. Total real-world asset market value up 47% year to date. The world's value is moving on chain. ICP investors that see thriving Bitcoin DeFi activity taking place and a thriving global organic network are patient. Chainlink, people understand how massive the partnerships with Chainlink are. Wall Street's just starting to wake up to the actual fundamentals of these assets. Maybe not understanding why Ethereum isn't scaling as much. They're starting to, right? So the world's starting to wake up to what is going on. Early stage investors understand it. We're stacking passive income. We're staking Chainlink. We're staking ICP. And so if you have questions about how to do that, you can reach out to me on Patreon. But again, it really doesn't get more exciting than this, the opportunity we have. The early stage investor community has a meme coin on Solana called WAGMI. Again, we want to absorb as much external liquidity as possible on Solana. There's a reason our WAGMI token is up over 4,000%. This is the power. This is what happens when you don't have insiders dumping on you in a project. It goes up instead of down, right? It's a novel concept in crypto. Insiders not dumping on people, but that's why the chart of our meme coin looks phenomenal. It's over $300,000 market cap, and it's just continuing to absorb massive amounts of Solana liquidity, and it could become one of the biggest meme coins on Solana. That is the goal. And of course, we want to bring that total value locked onto ICP eventually. So check out WAGMI. Check me out on Patreon if you want to know how to stake some of these assets and earn life-changing passive income. We also have a friend of ICP in my Patreon community, one of the leaders at Ano t-shirts. I am wearing one of those t-shirts right now. He wanted to thank me for the work I've been doing for ICP. So he sent me a t-shirt and I really appreciate it. I'm always going to plug all my Patreon members, businesses, and he likes ICP and I'm wearing it and it's ridiculously comfortable. Normally I wear super cheap clothing and t-shirts, but once you upgrade and wear something that's classy and feels good and actually has a nice cut, you realize that you don't want to go back to the old way. It's like when you fly coach all the time and then you fly first class, very difficult to go back to coach. When you wear really cheap clothing and then you upgrade a little bit to something higher quality, you start to notice it. So again, I'm just plugging one of my Patreon members and a fan of ICP's amazing product, which I'm wearing right now and I like. But ICP is one of the biggest organic communities in crypto. It has the best social media engagement. We covered SUI in a previous video. I don't see organic community activity like ICP and any other asset. We have XRP doing its thing, but the ICP community is strong, it's organic, it's global, it's built around rock solid technology, Chainlink, ridiculous fundamentals. Really appreciate you. Thank you for watching.